Earlier this week, I said that Bitcoin is not for everyone, and I changed my mind about that. I used to really believe that Bitcoin was for everyone, and I don't believe that anymore. I said that earlier this week. And then yesterday, I went and talked to a class of 4 and 5-year-olds about Bitcoin, and I read them a kid's book about Bitcoin. And I realized how strange that is that I did both those things inside the same week. And so now I'm coming full circle on why I believe that the Bitcoin yield curve is what makes Bitcoin for everyone. Obviously, that was not the message for the 4 and 5-year-olds, but it does matter and does play into it, okay? Previously, let's go through the entire journey, okay? Bitcoin launched as a weird side project on the internet with 100 people on an email list, right? And then it was mostly computer scientists and software engineers. And then it just grew from there, right? And now it's being talked about at the highest powers of just power in the world. And it's spawned multiple other cryptocurrencies. And now almost everyone has heard about Bitcoin and has their base opinion about it. Okay. Why does that matter? Because it's still extremely volatile, right? Like it's a new thing that's at the intersection of software, money, politics, and just fundamentally how the world works. Because if the world did choose to do money a different way, that has implications across everything, So that's the reason why I lean so hard towards Bitcoin is for everyone, because everyone's life does get better through having better money, right? Okay. But then that belief, that ideology runs headfirst into the brick wall of reality that the quote unquote normal person, or the quote unquote normal person cannot deal with the volatility of Bitcoin. They don't have the ability to have a large enough gap between their earnings and their savings, or financial knowledge, or whatever, insert XYZ 27 things about why they don't have the capacity to deal with the volatility of Bitcoin. Okay? So you have the people that can deal with the volatility of Bitcoin, the people that can't deal with the volatility of Bitcoin. And even the people that can deal with the volatility of Bitcoin, up to this point, what's been the main way that you would deal with it? You would just believe in the ideology, believe in the ability that in the end, it's going to be way higher than it is right now. So it's worth it. The drawdowns are worth it. And then also you would hold some cash. And that was the whole thing. For a long time, Bitcoin personal finance was summarized. It wasn't even called Bitcoin personal finance. It was just summarized as hold this much amount of Bitcoin, hold this much amount of cash. And that's what people would talk about, is just the ratio between those things. Bitcoin couldn't be for everyone because some people's ratio is 100% cash, or just 100%, right? 100% cash. And then they would mess around with stocks, maybe mess around with the S&P 500 because they believe that's less volatile, right? Okay. Now to today, 2026, we have a full Bitcoin yield curve. Meaning that you can hold varying degrees of Bitcoin volatility, Bitcoin growth, and Bitcoin income. So you can mix and match whatever you need in your personal finances from Bitcoin products now. That makes Bitcoin for everyone. And this is the realization that Stretch has from MicroStrategy, and why Stretch is such a big deal, STRC, because they are pulling all the volatility out of Bitcoin, as much volatility out as possible. And they're saying, look, we believe and understand that Bitcoin is going to appreciate 20 to 30% a year because of structurally, again, all the things you know from the podcasts. Structurally, that's what they know. Or if you're not a Bitcoin believer already, all the things you know about your Bitcoin friends that are on board with it, right? Because for a little bit of context, I try to throw this in every now. My name is Brian. I'm a personal finance nerd my entire life. Started investing in Bitcoin in 2015. Started investing in real estate in 2019. Recently left working full-time W-2. And now I'm moving into income investing. And so it's the most through my own lens that I've been analyzing what it's like to draw income off of your investments. And it's opened up a lot more surface area to think about Bitcoin. And it's given me a lot more empathy for people that have built their wealth in concentrated positions in other assets. Again, be it real estate, be it Tesla stock, be it whatever. And so people come to this channel from Bitcoin only channels. They come to this channel from crypto channels generally. And then a small portion of people are starting to come over from dividend and income investing channels. And to the point about the Bitcoin yield curve making Bitcoin for everyone now and kind of completing that circle of it being for everyone, this is for a while. Up to this point, there's been a tension between the financial independent retire early movement, the dividend income investing movement, and the Bitcoin movement because of Bitcoin's volatility and because of Bitcoin's lack of cash flow. Now, with the popularity of Bitcoin covered call funds and the popularity of these digital credit products from MicroStrategy, those worlds are colliding. Those worlds have an opportunity to overlap more than ever. And two things are true at the same time. Broadly, Bitcoin investors are underexposed to cash flow. Bitcoin investors have crushed it on the growth side, but they are still in large reliant on their job-based income in order for their cash flow. Whereas dividend snowball people they're largely underexposed to the growth story of Bitcoin. And both worlds, what I believe is happening, like a long-term thesis, what I believe is happening is Stretch, the Bitcoin money market, is setting a new risk-free rate. That's the real rate of real risk-free rate of the world. The government treasuries market is going to be forced to move up to that by Bitcoin companies, by Bitcoin-backed credit. And Stretch, call it a stable coins, call it whatever, because this credit, I know I'm a little but this is how it goes. This credit, this fiat money credit, is on the back of United States treasuries. Why do we use this fiat money credit? Because US treasuries are the most large liquid debt market in the world, right? And the most trusted and the most stable. And so your core position at Fidelity is allowed to be a government money market because of all of the trust. Bitcoin is saying Bitcoin has more credit. Bitcoin is more trustworthy than United States government debt. That's going to transform the entire debt market and the entire structure. And so rather than having treasuries that pay this, strategy is just saying, hey, we'll pay this because we know Bitcoin is going to go up and we're happy to pay the dividend of that. So that becomes a new risk-free rate in this reality, okay? That then leaves all other companies, private or public, in a scenario where to be a growth stock, you have to be growing faster than Bitcoin because Bitcoin is the new index. Or if you're a dividend stock, you have to be paying a higher dividend than the risk-free rate. So there's going to be a ton of companies, private and public, that are caught in no man's land right now, okay? You layer that on top of the kind of all the AI stuff that's happening and AI-driven deflation, AI-driven productivity. Take that with whatever flavor you want to take it. That even more proves that so many companies, public or private, are going to be caught in no man's land, which is going to cause a giant rotation of investing because all of the rules of investing are starting to change. So the Bitcoin yield curve is what finally gives everyone a place to get some Bitcoin exposure because it's no longer just simply own raw Bitcoin and eat the volatility on the face. You're now able to own a product like Stretch that is backed by Bitcoin, but you're only participating in some of the income because someone else is dealing with the volatility. And in that's a super great trade. If that makes sense to you and you're looking to connect with other people to talk about the Bitcoin yield curve, we just had two awesome, great new guys join the Bitcoin channel, the channel membership, and then get into the private Discord, the Bitcoin Personal Finance Think Tank, to talk about this. And that's what pumped me up again, just to talk about the yield curve again this week. And so definitely do that. Click join next to the subscribe button and get into the private Discord. If Discord isn't your thing, the other way you can connect and get involved is book a one-on-one call, and been really enjoying those as well. There's a ton of appetite out there for people that are trying to incorporate Bitcoin into their personal finances at a higher level and they've already done all the basic personal finance stuff. They've already done all the basic Bitcoin philosophy stuff, and they're really looking to build the legs of their table, and they know that they're strong in growth and they need cash flow, or they know that they're strong on cash flow and they need growth. And talking through that live, teaches me a lot, and I think helps other people as well. And so click that button, book a one-on-one call. Those people that book the one-on-one calls, I'm working on organizing a way for us all to meet in person in Southern California towards the end of this year, and gonna bring like a life insurance speaker, an estate planner speaker. I'm gonna bring someone to talk about the Bitcoin yield curve, really talk about all of this at a higher level, and continue to round out the conversation around Bitcoin personal finance. So see you on the next one.